Hey everybody, Gary with Basecamp Trading. Let's talk about reversal dojis. First of all, what is a reversal doji, or what I call reversal doji? Now, keep in mind that what I call a doji may not be the absolute textbook definition of a doji. I know a doji opens, closes at almost the exact same spot. For me, a doji can be a candle that has a relatively small bar in comparison to having a wick on each side, but we're not going to get that technical. But here's a good example of what I call a reversal doji, and this is on the 240-minute chart on the ES. You can see that the ES was actually making a lower low, lower high, followed by yet another lower low, and was in a downtrend, breaking beneath the cloud. And then you put in this reversal doji. In order for it to be a reversal doji, the low of the bar has to be lower than the previous bar, and then the next bar triggers it. In order for it to be a reversal, the next bar has to trigger it back in the other direction. So you can see ES was pushing down. You put in this big bottoming tail, finishing in a doji. The next bar is a really bullish bar, opens right here, closes up at the top, and triggers this as a reversal doji back in the other direction. And you can see that basically the ES, for the most part, has been climbing off of that ever since. But that's not really the only way you can trade a reversal doji. It doesn't have to actually reverse the trend. In fact, one of the ways that I like to trade reversal dojis, maybe even better, is I like to trade them when they are in the direction of the trend as continuation trades. So for example, right here, gold broke to the upside, pulled back, put in a reversal doji, triggered to the upside, continued to work higher, still on an uptrend, 5 and 18, cross to the upside, above the cloud, above smooth 50, make this pullback, set up the reversal doji, triggers it to the upside. And you could maybe even make an argument that you had another little pullback in a reversal doji right here, because the low of this doji was below the low of the previous bar, and then the next bar was a really bullish bar, triggered it to the upside. So you can trade them as actual reversals, or you can trade them as continuations, and you can do this on different time frames. Let's just randomly pick one here. Let's look at a 2-minute ES chart. Okay, here's another good example. ES makes a nice push higher, makes the pullback, sets up a reversal doji in the direction of the trend. Momentum is bullish. The next bar is a nice bullish trigger bar, leaves a bottoming tail. The entire body of the bar is buying, closes near the top, triggers the reversal doji back to the upside again. So you were moving higher, made the pullback, put in the reversal doji, the next bar triggers it, and for a nice continuation in the same direction of the trend. Another little pullback here, sets up the reversal doji, triggers, continues. Not a big move higher, but takes you in the same direction of the trend. So you can trade reversal dojis as actual reversals and trend reversals, or you can trade them as continuations in the direction of the trend. So a couple different ways to trade reversal dojis.